of payment methods, it's really a great thing because ultimately customers want more choice. And as a digital wallet, what we would going to do is actually to continue to integrate and partner with many more of these payment methods because we want to give the power of choice and the power of convenience in the hands of our customers.
what we do is we do it in order that we're not even thinking about it. Right? So it means that it's seamless. We don't ask people to think about it and to make an extra effort. We're not thinking, rethinking it, redesigning research. We've been thinking it for you. We've decided and thinking about it and implementing it. So basically, we provide a solution in a very easy way in the daily life.
That sounds good. I think that goes back to what Tom said a little bit earlier about how sustainability is kind of a spectrum and there's different things that you can take from small actions, which I guess ties in very well with what you do, is that it's a small action for people to kind of use the reusable, especially when it's right in front of them and not even kind of the decision that's offered, and then kind of going on to bigger grander projects on the road. So going on to you next, Tom, since you were just speaking about team, could you share a little bit more about the work that has in helping organizations when it comes to things like waste reduction, plastic credits, all those things?
Yeah, absolutely. I did bring myself
every year again. Only for that modification.
lots of questions pouring in, and Hintran, I want to lean on your perspective in here. There's also a question on, for large banks, there's also a lot of legacy that we have to deal with, and therefore there might be some inertia to change and adopt with the speed of change. So maybe as you give your perspective on the topic and the big shifts, you want to weave in the large institution perspective as well.
So thank you for having me here for DBS Bank. We just posted quite good results yesterday, so in our DBS investors, we should be very happy with share price surge. Anyway, before I answer your question, I thought it would be useful to reflect on the evolution of human mankind, over the many million years, right? So before the agricultural revolution, right, it took the world economy once every 250,000 years to double. Now during the agricultural revolution, it took 900 years to double. So that was a remarkable improvement. Now during the industrial revolution, or the last few centuries, every 15 years, the economy doubled. Okay? For DBS, we took every 5 years to double. Okay? But with the advancement of AI, talk about AI, just AI alone, I think it will just be a matter of minutes, right? And it's true, right? So we just look at Gen AI, that exploded in November 2022, 2 years ago. The number of use cases that we have seen in DBS is just phenomenal. You mentioned all cases on the customer center, the coders, the RMs, operations. Those vertical use cases are already in production, right? And then horizontally, we also have our DBS GPT, our knowledge base that is provided to everybody's use. But I think what is interesting to note is that initially we might have thought that many colleagues will be a bit apprehensive, right? Because it might mean that the AI or Gen AI is going to take away their jobs. Interestingly, no. They were all very happy. Why? You quoted the example of the customer-centered agent. Every day, they receive a lot of calls. Very often, these calls are not so pleasant, nasty calls, right? So they are frustrated. Guess what? We actually have a small room in the customer center where we place a sandbag, a punching bag. When the agents are frustrated after a few calls, they go there and vent. Okay? So number one, I think they really feel that, wow, now it's going to take away a lot of these frustrations, the toil that we have to face for all these years. So it does remove employee toil. Number two, the truth of the matter is that as a bank, even though we talk about fair dealing, we have been more fair in dealing with our large corporate companies, less so for SMEs, because we don't have enough people, right? We'll be fairer maybe towards our private banking customers, right? But less so for our mass market customers. But the Gen AI tool, in my mind, is going to transform that. Let me give you one example. So it was 2 weeks back, I was having lunch at our DBS Graduate Cafe in our office. I couldn't find a seat, so I found one empty seat, and I saw this colleague. I do not know who she was, but as we chatted, I realized that she started her first job at DBS more than 10 years ago, selling personal loans at a branch. Then when we launched digital banking, there's no need to actually get a loan at the branch. People can just apply for loans online. So what did we do? We moved her to our Changi Airport lounge. So DBS has got a lounge. In case you're not a member, you have to sign up for that. Right? And she learns how to service customers, but she also learns, how to sell FX, because customers need FX. COVID-19 came. The lounge was closed. She was then moved to another branch, and she was retrained to become a wealth manager. But guess what? She has got like hundreds and thousands of customers. She couldn't serve them personally. So when we told her that, hey, we're going to use Gen AI to help you to nudge customers, to be your virtual RM so that you can serve all these customers very well, she was really very happy. So the message that I'm trying to convey is that in all the years of our transformation on digital, we have never fired anybody. It's always about reimagining, reskilling and upskilling our workforce so that they have a better life, right? And we are also able to enrich our customers in their livelihood better. So that's kind of the message I want to convey.
No, thank you. And I think this sort of also ties in that as we see organizational and scale this, they're realizing this is less about the technology, but more about how do you adapt your operating models, and therefore what does it mean in terms of upskilling and reskilling your folks to adapt to these new operating and business models. There are lots of questions around how should I think about what are the skills that would be required for me, especially if I'm in an organization which is got a mix of people who are not that tech savvy. Chairman, do you want to give us a view on how should people think about gearing themselves up in this new world, especially if you're somebody who's not technology oriented and a very erstwhile traditional maker?
It's a very, very good question. I think we've been through the first, the second, the third, and now fourth industrial revolution. What I think this time around, and I've been asking this question for many, many years now, and I still believe people a couple of years ago said we need to develop hard skills. We need to ensure that we understand technology really well. And for me, this was not sufficient. Yesterday, I was I saw people asking the question, what are all the skills most people was doing so that they can communicate? 90% of the people say it was soft skills. Soft skills for me still not
another trend that we're excited about is really the proliferation of the payment method. So many years ago in traveling space, we really talking about cash, traveler check, all that stuff, and then we have these cards, plastic cards, and then we have wallet-to-wallet payments, and now we have QR codes, whether or not it's developed by private companies, private networks, or government initiatives. So I think this continuation of evolution of payment methods, it's really a great thing because ultimately customers want more choice, and as a digital wallet, what we would going to do is actually to continue to integrate and partner with many more of these payment methods because we want to give the power of choice and the power of convenience in the hands of our customers.
Sandeep, before you build up, we agree on the backstage, Cecilia, that I can call you the Revolut of Asia, right? And you said, yes, I don't mind to be sort of in the same sentence of a $35 billion company, right? So cool.
45.
Exactly. So if you are the Revolut of Asia, so Revolut, as you know, they are monetizing way beyond payments, right? Which is also actually not very far away from the embedded finance topic that we were talking about, right? Because they are selling insurance, they are selling loyalty program, the way they monetize their card by associating a bunch of services. Is this the same trend that Utrip is going?
Yeah, so it really brings us back to the original intent when we actually, started the business. Like I shared, at that time we were working in China. So my co-founder was working for WeChat. So we are most familiar with that business model. And what we realized was, as a product, where we want to be within financial services is where you have the highest and most frequent use case. And payment is, right? Because when you think about the different segment of financial services like lending, not everyone actually needs it. Or even insurance or investing your money. Not everyone actually do it. But payment is one thing that you actually have to do multiple times a day. It really gives you that frequency for us to build the stickiness we need as a digital product. So when we started a business, payments, e-wallet has always been the beginning point. We thought this is a great starting point because everyone needs it. We are able to use it to build a massive user base and very loyal user base. And with that, we can actually do a lot more. And also, to Sandeep's point earlier, the data that we got about our user, it's hugely valuable to us because we can see so much behavioral and also transactional data. We know where they spend, how they spend, what time they spend, in which country they spend, and all that really valuable information. So in fact, it's really a privilege for us to be able to in the position to see all this and really be in the position to help them solve more problems around the money. Now that they have entrusted us with their real identity, with that hard-earned money and stored in the wallet and being spent over time.
Perfect. No, I think that's fantastic point, right? I think data is very important. And we see this all the time. Like I sit on boards of a couple of neobanks, a couple of credit card companies. And what we see very clearly is even for a regular customer living in country, something like 10 to 15% of the revenues, financial revenues, actually are travel related. Now, most of our customers are, if you think of growth markets like India, Indonesia, Brazil, South Africa, right? Most of the customers for fintechs right now are people who are maybe the top 5 to 10% households in that country. Right, so the highest earning segment, within that segment, something like 10 to 15% of their revenues, or financial revenues, would be travel related. That would include payments, that would include lending, that would include insurance, all of that put together, right?
Sandeep, I have actually a question that came to mind when we were talking about the fact that embedded finance brings different players to the game, right? So large corporations typically. So tomorrow, technically, you could be co-investing with Booking.com, right, on a deal. Because thing is, co-investing with another VC is one game. Co-investing with a corporate is a completely another game. Do you see this as a trend? And if you do, what do you think are the challenges?
Yeah, and Booking.com is a great example, right? Because it is a tech company but has become more corporate over time, right? With all due respect, right? It's become more corporate over time. And you see that with everyone. Once you get to a certain valuation, 5 billion, 10 billion, whatever that sweet number is, you have to become a bit more structured, a bit more process oriented, a bit more predictable, for lack of better word. So we do see the trend, right? Because see, as a VC, what are the successful exits for me? Right? Successful, not unsuccessful. Successful exits are IPO best. Right? If IPO doesn't happen, then trade sale is the next best one. Right? Which is a corporate coming in and buying your fintech and incorporating it into your existing business. And usually these acquisitions are about two things, right? The big player would usually bring distribution, they would bring customers, and they'll be acquiring smaller companies that are product verticals. Right? So if someone has figured out how to give very good BNPL for flight tickets, let's pretend, right? So if someone has built that product, then Booking.com, that could be a fantastic acquisition to have, because on their payment page, they can show you credit cards and UPI and QR code payments and what have you, and then their own, that you can actually convert this into a loan right there and there. So you can monetize your customers a lot better. So we see that trend increasing as fintechs have become off-node. They have become valuable enough that big companies will start looking at them in a meaningful way. Right? Now, how it is to invest with them, it's a mixed bag, honestly. But it depends on the particular company and actually the particular team. Right? Nubank is one of our portfolio companies, and they are also investors into one of the neobanks that I'm an investor in. So I sit on the board, they are an observer on the board. They are very valuable, fantastic people. They give insights from how they saw Nubank as relevant to India for that particular company. So very, very valuable. They are also not very inclusive, so they would not try to peer into numbers and try to be a competitor or intrusive actually into the company. So very good board members. You could have bad cases also, right? I'm not saying everyone's great, but more often than not, the incentives are aligned, I would say. So it's not a position of conflict. Of course, the advice we give is slightly different, right? I want to still push the company towards an IPO, and they would want to wait for the right moment when it becomes more of an acquisition target rather than an IPO candidate. So
We have a few seconds left. Cecilia, any final word for this to close this panel?
When we think about payment and fintech, the intersection of fintech and travel, actually what we find most special is payment is actually one function that cuts across every step along a traveler journey. And that really allows us to do a lot more over time. And when you think about a traveler before they travel, they need to make bookings. Well, of course, Booking.com comes to play, buying your flights, buying your hotel, but that is really just the starting point of what we see. So when they are there, then they need to start thinking about where I eat, where I go shopping, and even after the trip, they may be splitting, the whole meal with the friends and family that they travel with, and how about the leftover currencies, right? Can I exchange it back to my home currencies and send it back to my bank account? So why we love this business is because we felt we are there to help them across every step along the traveling journey. And what it means to us also is the opportunities, the untapped opportunities that we can provide much more travel focused or finance focused kind of features for them over time to add more value to their lives. So that's why we absolutely love what we're doing.
You made me think that I don't know if I will be able myself as a European citizen to download your trip, but I wish I could, because now I have plenty of cash, which by habit I took it out from the ATM, and I'll probably, very likely, bring it back to Europe. Thank you very much, guys. Join me in a big applause. We had fun.
thank you.
Thank you.
Thank you, speakers, for the insightful conversation. The next session is a fireside chat with one of the world's largest insurtech companies. Bolttech stands out not only by leveraging technology, but also by demonstrating resilience and innovation within the sector. In this fireside chat, hear from Bolttech on how it successfully raised capital during a funding winter and its plans to shape the future of insurance into a more accessible, efficient and customer-centric landscape in 2025 and beyond. I would like to welcome Rob Schmidt, founder and group CEO of Bolttech, and moderator Varun Mittal, founder of Fintech Nation and head of innovation and ecosystem at Singlife.
we are the guys before your final drinks. I heard SFF has organized a bunch of drinks, different bars, so we're the guys who will usher you to the drinks afterwards. But Rob, as we look at this is a funny thing about this panel. So across Southeast Asia, if you look at the two largest insurtechs are on the stage together, combined worth $5-6 billion. Combined, both this insurtech and this insurtech have raised more money than all the other insurtechs combined. So this is like the best thing you can expect from an insurtech world. And as Rob, you look at from that perspective, so the slight behavior difference between your flavor and our flavor is we're the manufacturers and we work and collaborate with you for several accounts for even 5 years. You excel on the distribution, for the digital enabled distribution. We do manufacturing, digital and offline. And how do you see all of that coming together from your lens, and what does it feel like building that distribution business from Singapore for the world?
Well, first of all, it is a real pleasure to get a chance to be with all of you today, and Varun with you, because as you just said, your organization is a big partner of our organization. And sometimes that surprises people when you think about two insurtechs working together, but in reality, it's actually our normal way of doing business. So if I recap a couple things that Varun said, number one, we've raised a lot of capital. Boltec itself has raised the largest Series A in the history of the world for an insurtech, followed by the largest Series B in the history of the world for an insurtech. And what's maybe most interesting isn't how much we've raised, but who we've raised it with. And something that Varun and I have in common is, for example, here in Singapore, the Economic Development Board investment that we have. So EDBI, thank you, a great partner. But so therefore, it's not just about how much capital, it's who you're partners with and what they can do. So it's great that we can be partners from a business perspective. It's also great when our investors are our partners in helping us to succeed. So at Boltec, EDBI is an investor. Leapfrog, the largest impact investor in the world, is our investor. Khazanah, out of Malaysia. These are really important examples of who the investors are, because they can help us succeed as part of an ecosystem partnership. They can help us to identify opportunities for commercial relationships. And then we have to, I think the way we've been so successful is we have to have a mindset of cooperation, maybe co-opetition, and this concept of big ecosystem open-mindedness. And I think that's what is so neat about us together. Together here in Singapore, for you, for example, 1 out of every 5 households in this country has a helper. And together, we are providing protection solutions for those helpers. Boltec's distribution and the wonderful power of Singlife and the balance sheet, the risk-taking capability that you have. So to me, it's a mindset. It's about collaboration, competition if necessary, and really in the end, just a mindset of helping one another do the right thing for the customer.
Absolutely, it goes back to our belief in open architecture, which is something which you also emphasize a lot on, because we believe that the customer should have choices, the channels should have choices, and which is where they would want diversity from that perspective, and that's something which we have always looked at. So one thing which I've been always looking at the whole embedded finance play from that perspective is a majority of the products have been GI based, which are annually renewable flavors from that perspective, and we do a fair bit of that. But the fact remains that globally, if you look at in the retail side, commercial separate, in the retail side, a larger value pools are on the life and health, but not as much dollar or those kind of things have achieved in your kind of world. How do you look at that? GI will happen what will happen, but what about life and health? Where do you see you play in the life and health space?
We think of this as sort of a journey. the nature of the beast is that the first transaction that someone might do with us might be perhaps protecting your cell phone. That's the first transaction, but that's not our end destination. It's sort of one of the steps along the journey. And you might be able to, for example, protect your cell phone, and your next question might be, maybe I want to protect all of my home electronics because they have a similar characteristics. And oh, by the way, if I turn my roaming on my cell phone, I know that I'm traveling, so maybe I can protect the travel. Or oh, by the way I'm likely to get hacked is through one of these electronic devices, so perhaps it's a personal cyber protection. All of these things are actually part of a journey. The truth of the matter is, neither you nor we know the exact path that journey will take. And so what we're trying to do is create a set of capabilities that create the flexibility for a customer to be able to jump through the journey the way that they want to. I do agree that it might be wonderful to be able to provide a life product or maybe a more complex health product through our capabilities, but we can't force that. It has to be, how can we make sure that we have a tailored, affordable, accessible, and a convenient product at the exact point that the customer wants it. And in every country here in Southeast Asia, or even we operate in Europe and we operate in North America, it depends on where the customer wants that, not where we want to push it. And so our goal is to make sure that we can create those capabilities, but our humility has to be in recognizing that the customer journey will be different everywhere, and it doesn't matter if we want to sell something that is more valuable for us. The question is what's most valuable in the eyes of the customer.
Another thing is, since you operate in different parts of the world, we've also seen different parts of the world because of the broader group we are part of. We've seen the characteristics in some of the emerging markets are very different in terms of the focus on more urgent protection items than more broader terms. When you look at distribution through embedded partnerships, are there specific differences you see between the Western Hemisphere and the Eastern Hemisphere, or the global North versus global South in terms of the customer attitudes, because you serve a lot of diverse, disparate customers?
In a big way, the geography or the nature of the cultures and the customs of an individual country matter completely. In the end, you can probably tell from this accent, I wasn't born in Singapore, although this is my home. So I'm proudly a PR living here in Singapore since 2018. But the truth of the matter is I live here because it's so difficult to assess how to make things work in Southeast Asia from North America, or in Europe from Southeast Asia. And so it's super important for us to have a team that actually is stationed in all of these places where we're trying to solve, because the truth of the matter is, as you were just indicating, the answer in Europe is different than the answer in Asia. But don't mistake yourself, think that the answer in Asia is the same in every country in Asia. Singapore is hugely different from many of the other countries here, even in Southeast Asia. And so therefore, living here, breathing it, living it, thinking about it every day, interacting with partners like you in this space is the real path for us to be able to understand. But if you say, hey, are the needs and are the priorities different? They're night and day different. The challenge for us is to look at it from the customer's lens into us, not from our lens out to the customer.
Very interesting. And if I were to bring like one very Southeast Asian flavor, what has happened is a lot of distribution platforms, at least in the region, have started to buy manufacturing licenses. We saw that happen in the Europe, and some of those companies who started this and then stepped back from doing that from their home markets itself. Some of them tried to do in the US, and at least on the current P&L, there are questionable views whether what works. So when there is this conundrum between distribution-led players, see, manufacturers will always do distribution themselves and through partners. But when distributor-led players, in some markets you're doing manufacturing today. And not all people may not know, right? Specifically for some of the Western markets, you do manufacturing. So what's your decision framework process in terms of which markets and which products would you have, let's say, private label, and which ones which will be pure distribution? Because as a manufacturer, sometimes there's nervousness. When I'm partnering with this, they will learn about it enough and they will launch their private label, take the top end of the customer pool, and I'll be left with the bottom 40 from that. So how does that work, and how do you explain that to your manufacturers because when you're doing manufacturing, you still do distribution. How do you manage that conflict in a sense?
I love this question. The very first thing I'll say to all of you, and I'll say to you as my partner, is don't fear Boltec. We are here to enable you. We're here to be a partner of you. We are not here to be your great competitor and your great disruptor. It's very much a mindset. I'll start by saying this to you. We are an insurtech that seeks to be a balance sheet light insurtech. I came, before doing my role at Boltec, I came from AIG. I spent a 12-year tour of duty with a balance sheet. I do not want to pretend that that is anywhere on the path for the aspiration of Boltec. It is not. What I really want us to do is be a distribution-focused enabler who can work with the balance sheet players. The truth of the matter is that in reality, we are not all born with lots of friends. So as a baby, Boltec, we're only 4.5 years old. At the very beginning, we had no friends. None of you liked us. Today, I hope you like us.
We have it for 4.5 years. We were the first ones in Singapore, so
they love you. When you start without having a lot of friends, sometimes you have to do some things yourself. And so we've had some balance sheet capability because we needed to, out of necessity. And over time, as we have welcomed investors into the Boltec fold, we have been willing to sell off balance sheet risk-taking businesses so that we can continue to narrow our focus more and more toward the distribution business and less from the risk-taking business. Because there are great risk-takers in the audience and you who are just better underwriters than we want to be or that we today have any aspiration to be.
When he looks at acquiring companies, because he has acquired a bunch. If I'm not mistaken, at least 3, 4 ones I know, you can tell how many you have acquired. And what does it take for you to acquire? What do you look? Because I know at least 5 who are saying, what does Rob see so that we can be that?
So the very first thing I'd say is, yes, we've done acquisitions. We do acquisitions partly because I don't want to die of old age building it ourselves. I do want to die of old age, by the way, just not waiting to build all of this ourselves.
So too long, we have covered your life.
Excellent. So together you can see another place in which we're partnering. If I die of old age, you can help me. But I really believe that we think of this as a path to accelerating what it is that we want to accomplish. Because of that, we spend our time focusing on the problem that we're trying to solve more than the solution people are trying to bring. So for example, if you are an AI company and you say, I'm here with a solution, buy me or use my solution, it's nowhere near as interesting to me as if you say, I understand the problems that you're trying to help the world to solve, and we think that we can be part of helping you to accelerate the path to solving that problem. If we can find partners like that, we're really open-minded because we're not going to do all of that by ourselves. But generally speaking, it's not a great path to say, I've got the solution, I hope you have a problem that it fits.
Would you prioritize more technology companies or distribution companies? Because other challenge for insurtech companies are, like young founders who want to build stuff, is do I build a pure tech play or do I build a distribution? These are very different DNAs, they're very different. What are the pros, cons to help these young people decide what to build?
It's a great question. There's no single answer because we actually like both. So sometimes there is an element of the technology that we would have to build ourselves, but someone might have a better solution for again and a faster path for us to create that capability. We love that. We would also tell you that distribution is king. So if you say to me, what do you want in life? You know what I want? I want more of some things. I want more partners, which means more distribution partners. I want more buyers of embedded insurance. I want more capital for any of you out there who are capital providers. We'll talk to you too. We want more and more and more, but we also want more solutions to the challenges that we're facing with trying to figure out how to better serve our customers. And so it's not one or the other. It could be technology, it could be distribution. The truth of the matter is, it's going to be really rare if someone comes to us with great distribution partners but no technology. So in all likelihood, you had a great technology capability or idea, and somehow you were able to find a connection with a distribution partner that's super interesting to us. So that's the way we think about it. But we're not trying to boil the ocean and be everything to everyone. There are simply a handful of vertical industry groups that interest us. We love the telco industry, the telecommunications industry, and the manufacturers. We love you. We love the automobile, the mobility industry, and the manufacturers. We love you. We love the retail industry, especially the e-commerce players. And we love the real estate industry because one of the products that we frequently are selling is renters insurance, homeowners insurance, etc. So these are the industries we're interested in. We're not trying to do everything. We're trying to fundamentally do diligence.
And when you look at that perspective, it would be fun if you could walk through one acquisition. Pick any of those and tell them that, okay, we did this company for this reason and this was what we liked in that asset. Pick something from the past so that it's not so sensitive.
That's okay. I'll take the last acquisition we did. We finished raising the largest Series B fundraising round in the history of Roper and InsurTech in 2023. And also in 2023, we bought a business out of Poland in Europe called Digital Care. We are thrilled with that acquisition. That company focuses on the protection of handset devices, the cell phone. And they have a really great team with really good technological capabilities, some of which we've thought of, but we haven't been able to build yet ourselves. But they also came with some amazing distribution relationships. So we got all of those things. We didn't just get tech, but we got some tech that we don't have ourselves today and that we didn't want to build. And we got some amazing distribution relationships that will help us to grow faster and better and complement what we're already trying to do. That's a great example, and we were not afraid to put real capital at risk to do a very nice sized chunky acquisition, having just raised capital.
That's fantastic. I'll just summarize it for everyone. So what we discussed and learned is the real power is for manufacturers and distributors to collaborate and create real value for people. And that's one key part. For the young founders who are building assets, whose view is that I'll build something for a trade sale, focus on being rock star at what you're doing. If you're building pure tech, be rock star on that. If you're building distribution, use tech, relationships, whatever, but just be a class. You need to get your straight A's to be able to that, because there's enough options for acquirers. We acquired companies, we were acquired, he has acquired companies. There's a lot of traffic and competition. Get your straight A's, whether it's technology, distribution, culture, and mission, and then hopefully you would be on the stage next. Thank you so much. Thank you, everyone. Thanks for all.
Right. Well,
Well, thank you for being here. This is the last session. We hear that this is the last session of today, of the closing. What a privilege to close Singapore Fintech Festival. But also, it is my absolute pleasure and privilege to host a session with such an insightful and knowledgeable group of people, not just experts, but also fintech actors. I think that's, and operators. I think that's really important. The topic is quite exciting, of course. For those of you perhaps less familiar with it, let me set some context. Well, first of all, I think as consumers, we've all been facing, the situation when we have to transfer money internationally. So, as you can imagine, sometimes it takes a lot of time, sometimes it can be quite expensive, and typically you actually don't know how much money will be charged. So, in 2020, the G20 set of countries have come together to set a comprehensive roadmap and aims at solving exactly that problem. The roadmap basically is ending, well, so far, the key milestone is 2027, and the focus is on 4 critical components of cross-border transaction. The first one is speed. So as we all know, currently cross-border payments can take days to achieve the recipient due to various reasons. So the target that the G20 roadmap has set for all of us as an industry is to reduce the settlement time to 1 hour. The second aspect of the cross-border transactions, the second challenge, is the cost. Transaction fees sometimes can be up to 6 or even 8%, I think 10%, we were discussing behind the scenes, for some of the remote markets. The G20 roadmap has set the target to reduce them down to 1% of transaction value, which is an ambitious task, but hopefully achievable. We'll discuss that as well. The third one is transparency, so the ability to see where the money is and when is it going to arrive. The fourth aspect is access and being able to improve and increase inclusivity in financial reach. So 4 really important components of cross-border payments are being solved through a variety of activities. Some of them related to standardization of data, so we're going to talk a little bit about the ISO 20 or 22. But also the other things such as interlinking domestic real-time schemes. So and emerging new technologies. We have a few people here experts in the digital currencies, stable coins and CBDCs. And basically so this is kind of just a little bit of to introduce the topic, the G20. Now, I guess let's dive right in. So I'll start with a relatively broad question. So where do things stand on that roadmap? Arif, any progress that we can celebrate?
I mean, if you look at the latest report that was published somewhere around August 2024, it talks a lot about the ISO adoption. And I think beyond that, there is not much to be asked. If you go through the same report, there are some data points and statistics. In fact, one of the regions, one of the corridors, the cost of remittance is gone up by 1%. Probably it's because of certain events that happen. But I think overall, the ISO adoption from here on is going to be slow. Because if you look at ISO, it has like 4,000 different data elements. If you speak to most banks, if they are adopting, at least I know in my home country, they are adopting it as only as a top layer as an adapter. What it means is not going to the main systems, into the core systems. So the value that it brings in terms of data analytics or pre-validation, that really will not fructify till maybe 2, 3, 4 years down the line. So I think the progress, there is progress, but it's reasonably slow. What also is, in my opinion, is the larger challenge is not the ISO adoption. Besides the cost it takes, there's a lot of technology investment. Is in and around ISO, is outside the
Why OCBC would like to provide such a solution is because we know that voice management is a part of the key reason that business, how they can run smoothly, and one of the key things to help them manage
Hall 3, are you in Hall 3?
Co wziąć? Dobrze, nic.
可以打印东西啊，现在。
对，就是 3D 打印机。
现在就可以打印吗？
对，我们刚刚才打完一个。
哦。
This one。
好 ，OK。这个跟中国银行有什么关系啊？
这个是我们合作伙伴的一个就是3D 打印的技术，然后我们是把这些打印
小熊猫也是吗？
对，那个也是，就是您申请开户成功以后就可以拿到那个小熊猫。
Allowing clients to manage multi-location standard bank accounts through ICBC system with one-point access.
team, we want to collaborate with the power of Circle's USDC. I hope you're having some takeaways today. If you have any more questions, I'll be happy to help, happy to answer or clear around. So feel free to. Thank you guys.
So have you done this? Okay, thank you. Good luck to you. Enjoy.
Yeah.